Hello everyone, good afternoon. Today is Monday, September 26th. I'm going to be talking about today's price action and showing a little bit of the trades that I was able to catch. And yeah, I started the day with the loss, a sell as well, which was, in my opinion, not the greatest sell, but still something possible overall, and the direction was correct, so I'm happy about that. But we'll discuss that in a second. And then a take profit, which was 6R, which with partials taken and everything ended up being just a 4% instead of a 6%. So yeah, it is what it is. So let me actually put some music because I'm gonna bore myself here. Okay. Sure. So I wanted to start from the 1 hour because as you can see, we had this little bit of a drop where the euro dollar dropped. Let's start from this. 140 pips in, I don't know, a few minutes, because it didn't even take 1 hour. Around 30 minutes or something like that. Not sure why that was, probably because of the war going on and everything, but yeah, I don't know. I don't really care about that, honestly. So, yes. Order block in the 1 hour. Mitigated here. Honestly, I don't really use order blocks. I don't really understand order blocks because ICT hasn't really said many things about order blocks per se, so I'm not gonna really jump too much onto conclusions, but theoretically this could be a 1 hour order block, right? The last upwards candle before a really aggressive move that also has a fair value gap, and price mitigates that, causes a little bit of a reaction, it's higher again, take some buy side liquidity from the middle that we'll see just in a second, and also we have this little bit of buy side liquidity taken aggressively here, while again mitigating that 1 hour order block, right? Mitigating as well the fair value gap in the 1 hour from this candle's high to this candle's low, and overall respecting this candle's high. Maybe not. Let me check. Actually, it goes through it, maybe a pip or two, sorry, a tick or two. Yeah, it is what it is. My opinion still respects the highs, it still respects the structures, are good enough. So, a little bit of a reaction through London, right? London starts aggressively higher, retracement, mitigates order block, mitigates or takes sells the liquidity from there, starts going aggressively higher, 5 minute fair value gap, potential interest in there, continues aggressively higher, takes buys the liquidity, mitigates the hourly order block. And in the 5 minute, we see a market shift when this low is broken. 5 minute fair value gap, price mitigates that, goes lower, mitigates something here. Maybe this has something to do with this. Maybe a mitigation block, breaker block, something like that happening there that causes the price to go higher. Overall, in my opinion, just took some buy side liquidity, right? Like this, of that buy side liquidity, and then pre-New York started quite aggressively going lower, right? And if we check where this happens, we actually have multiple mitigations to first this one, then this one, now this one, which this one does go below every single one of those, right? Which is understandable why price actually caused this move higher, but basically still kind of respected the level and didn't really make a run through those levels, as an example happened through this high, right? Or above this high, right? Which is what I use for my entry. Does go further than that, doesn't really just nick the high by a tick or two. It's good to see that happening instead of just something like this where it moves below the low by what? As you can see there, this is the line of the level, right? Goes through that with the wicks by barely a few ticks and then just continues against it. So as you can see, we have some buy side liquidity here. Price starts going aggressively higher at the beginning of phase one, right? Session opens on this candle. All right, that one, and let me just another thing. Yeah, that's the New York Open candle. Starts going aggressively higher. Kind of wanted to see this highs being used as liquidity to then see the 5 minute displacement. That's what I was actually interested on. But as you can see, price pulled away a lot and actually mitigated a 50-minute order block, 5 minute order block, 5 minute for belly gaps, and of course we do have the things that we look for in here already, because we have the run and buy side liquidity. 5 minute causes a market shift with this low, fair value gap, price comes back up to fair value gap, and we do get a lower time from entry in there if I remember correctly, which we'll see now in a second. And that could have been already an entry for us, right? That could have been already the point. If we look at this, we could have already looked for step 3, 4, and 5 when price actually got to this area, right? By understanding that now we really just need price to trade into that fair value gap in the 5-minute or 15-minute and look for a lower time frame entry, right? Displacement and execution. So what else happens next? Let's actually review this, see if we actually get something. And yeah, we do. Kind of wanted to take advantage of this on paper trading, but didn't at all. And as you can see, you have fair value gap in here. Market shift happens all the way down here. Entry should have actually been on this high, right? This fair value gap in here with the stop loss all the way up here, considering that price could go up to this fair value gap, right? Or aggressively put the entry out there, stop loss out there, and just hope for the best, right? That entry would have worked out through the entirety of the session, right? And if we were been aiming for that sell side liquidity all the way down there, that would have worked out lovely, right? So 73 plus 4 is 77. Going for this candle's low, 8R taken in. Well, it did take a good amount of time, right? If we can be honest, but that's just 2 hours and 34 minutes to get 8%. So I wouldn't really complain about that much. So we do get some, again, right? If we look at the steps, first run and stops, all of these couple of equal highs that we have in the middle. Second 5-minute and 15-minute displacement or market shift. We have the 15 and the 5-minute, right? The 5-minute market shift happens below this low or below this low if you want to be a bit more conservative. Fair value gap created, price. So we have fair value gap created right here. Then the lower time frame, well, price trades into that fair value gap and we jump onto the lower time frames. Lower time frame, as we were able to see, causes a displacement, causes a market shift, creates fair value gaps, and that's when we execute. So you have the 5 steps, the criteria to actually take an entry. We do, so that would have been a lovely entry to take, and would have worked out lovely. Again, I liked seeing the seeing these 5 things to happen in the moment, right? To happen even through the session, right? So from 7 to 10 at least. And preferably from 8:30 to 10, and for all of this to happen basically all together as happened with this one, right? Because this one we have the round stops, immediately displaces and market shifts, and the lower time frame entry happens a few minutes later, right? So this is the kind of interest that I like seeing and that I like looking for. Reason why, as an example, in some cases we could have good entries, but I still avoid them or miss out on them, right? Because I try to look for somewhat of a perfect setup between quotes, because there's never going to be an actual perfect setup. So after that, we could say that we have somewhat of a interesting bias, because price could continue to go bearish, right? We hit that. We have the 1-hour order block. This 1-hour order block also has a clear round of buy side liquidity and then immediate aggression to the downside. This could then consider retracement. We have sell side liquidity to aim for, right? Buy side liquidity has been taken in most of it, right? We do have this couple of highs and everything, but overall has been taken a good amount, and we are seeing confluences to sell. Now, as an example, could we say that the run on this low is enough to look for entries in here? Maybe we could have gone for the lower time frames and say, let's see what happens. But this is the fair value gap on the 5-minute. This is the fair value gap, right? Or something like this, and price goes straight through that, right? That's why I like waiting for the 5-minute fair value. Sorry. For the 1-minute fair value gap in the lower time frame after mitigating the 5-minute, which gives them a little bit of an extra confluence to basically just avoid a couple of losses. So run and stops, still respecting this order flow, right? You can see how maybe an order block plus liquidity, order block plus liquidity, still respecting that lower, lower, high, lower, lower, high theoretically, right? So we have that order flow or that clear direction that price is basically respecting. And again, what I tend to base my bias on is liquidity. In this case, we have a lot of pending sell side liquidity down there that price could definitely go to, and we are seeing confluences to sell. It's not just saying we have a lot of buy side or sell side liquidity pending, so price is likely to go there, let's just buy or let's just sell. Right? I got the confluences to sell, and also I had the fact that price could go lower because we have a lot of sell side liquidity down there, right? So for me, that was good enough. We create price creates the fair value gap in the 5-minute. That's when I jump into a 1-minute. And sadly, I was not at home at the time, right? But it still managed to get into the entry. This is the first mitigation. As you can see, it doesn't really do much. Goes aggressively higher, mitigates basically this extreme area we have here, maybe an order block in 1 minute, maybe just mitigating, filling in the fair value gaps. And you can see a little bit of aggression lower, retracement, aggression lower. What do we have here? Market shift, fair value gap, right? That's exactly how I took my entry. And sadly was executed a little bit lower than expected, because it was executed at 72 when it was supposed to be executed at 77, but that's fine. And stop loss was 75 plus 4, 79, around, yeah, 751, and target all the way down to those lows again. So as you can see, we have a 1 to 6.13. That's as I decided to start closing partials while the trade is running in my favor, of course. I ended up taking just a 4% win, which means that overall minus the loss was a 3% win. But oh no, yeah, that's correct. So yeah, 3% win overall. Again, if I would have allowed the entirety of the position to run all the way to the target, would have been 6%. So it would have left me above by 5%, right? Because it took one loss. And that's really pretty much it. I also took some partials below this low, right? When that low was taken, because, well, price could have retraced a bit higher, you know, and then continue lower. I wasn't really interested in waiting for price to do something. Also, there was, as I mentioned through my Discord community, sorry, not my Discord, my YouTube community and my Telegram, there was a scaling opportunity. As you can see, price at this point is just continuing in lower after mitigating fair value gaps on the 5-minute. You can see how price mitigates a 5-minute fair value gap in there. Also, we have this buy side liquidity takes that, goes a bit lower, doesn't cause the market shift. We do have a fair value gap in here, right, from this low to this high. We do have the fair value gap. We don't have the market shift, so this is an entry that we miss out on. But then we have the market shift, which actually happens on this low. And the fair value gap is created in here, which leaves us with another potential entry on this high with a pretty large stop loss. So it's basically a 1 to a 2. 1 to a 2. And then we do get even another entry from this high to this low with a little bit of a better stop loss, but as we're pretty close to target, it's pretty much a complicated one. And just gives us a 2.69, right? So with this two, we are talking about an extra 4R, but as it is a 1 to a 2, it's not really worth risking our capital on it. And yeah, it is what it is. So those are the two scaling opportunities plus the entry that we had at this area, right there. 72. Let me make sure we redraw it. Stop loss was 751, and targeting all the way in here, right? 6.11. I don't remember what it was. 6.08. It's fine. So that is pretty much it. I mean, what you saw here, I would have liked to record the session, but I couldn't. What you saw here is this. So when I made the video of the 20R in 4 weeks, as you were able to see, it's basically just looking for these 5 things to occur. I don't really look at the daily bias. I don't really look at the potential direction based on different factors such as London kill zone, midnight price action, everything. But we do get some extra confluences. As an example, again, session opens here, trades aggressively higher. That could be considered market protraction. Power of 3 concept. We have many confluences that could allow us to think that this could go lower just because of this. We also have the fact that we're mitigating a 50-minute order block. We have the 1-hour order block as well. We also have the fact that we have a lot of sell side liquidity pending. We also have the fact that prices has just been going lower, clearly. I mentioned on Telegram that due to the drop last night, I kind of would like to see it just either retracing or consolidating for the rest of the week, because it's like it started pretty low already and it just continued going lower, right? Maybe the euro is just too weak, right? So it will just continue to fall, which is of course possible. Yeah, but I wouldn't say that for sure, honestly. So again, the entry was based on what? Run and stops. 5-minute, 15-minute displacement market shift, 5-minute market shift, and displacement with the fair value gap. We also do have another one down there, but it does mitigate the further one, so we're not going to draw this one. Mitigates it. What do we look for? Lower time frame trace inside the fair value gap, does it. Lower time frame displaces and market shifts, does it. And execution of the lower time frame fair value gap, right? The entry where I took the loss is not, or well, was not. Did I talk about the loss? I don't know if I did. No, I didn't. Okay, let's talk about the loss. I completely forgot about it. So what did I want to sell from, and why did I? So we mitigated 50-minute order block. We had this buy side liquidity. Also, this 50-minute order block, 5-minute fair value gap, 50-minute fair value gap. The run stops and everything is already an area to look for sells. So what do we have here? 5-minute fair value gap, right? Price comes down into it. We see price causes a market shift on this low. We have a fair value gap in here, and this is actually an entry that I not missed out, skipped, right? I just completely avoided, right? Decided to avoid this one. Price goes aggressively higher again, takes this highest liquidity, so I was happy to see that. And then I see this aggression again with another market shift either from this low or this low, whichever it is, doesn't really matter. Both of them happen around the same time, and took this right here. And for some reason, the broker they triggered this. So my entry was here, and my broker went just a little bit further, or it was spreads, can't really say for sure, and then went aggressively lower, took the low. I was thinking about moving my stop loss to half or something like that because I didn't really like where we were, this structure specifically, but I allowed it to run, and as you can see, it went aggressively against me, and took me out a few minutes later to then cost this. That ends up being the entry that I end up taking advantage of. Could we avoided the loss? Yes, but no. It's like this 5-minute fair value gap isn't created after taking buy side liquidity, as an example, right? That's something that I can see. The structure itself is pretty messy. We don't see aggression as we see it on this one, or as we see it on this one, or on this one as well, right? You can see clearly the aggression. On this one, we have many weeks, like price doesn't really go aggressively lower without, but while really leaving those gaps that we can clearly see. We do see the fair value gap and everything, and it's a pretty large fair value gap as well. But it's just doing it quite slowly. Market shift definitely here, right? But again, a bit complicated, so could have been avoided by just waiting for something a bit more clear. I understand why I took it. I understand how I could have avoided it, but I'm honestly not really. I'm okay with that loss. I'm okay with that loss because again, we had the confluences already to look for the lower time frame entry. So understanding that this could work out, in my opinion, was not a bad idea. Managed to miss out on this loss, which I'm really happy about. And yeah, it is what it is. So you can see the only paper trading that I took today was this one, which actually on the paper trading, I took the sell on the 5-minute, and I think it was on this low. Yeah, just allowing it to fill the entire gap. Stop loss was 90, I think, and targeting it down here. I don't think it closed partials. It was a bit lower apparently. There, yeah. I can't really say for sure. I don't think I did. No, 2000. This account I actually started when. Don't look too much into this because I was actually trying to do something stupid and well, kind of didn't work out. September 21st, so last week. Yeah. It's actually really good, right? It's going, how much is that? 1% will be 2,000, so 35%? Yeah, 35%, I think. You can do the math if you want. I'm not good at math. So it's actually going quite well. I'm pretty happy about that. And what I was talking about this, just in case. I was just trying to, as you can see, the balance here, I was just trying to put it up to 21,000, 21,000, right? Exactly to the point. I will close a bit more than supposed, and yeah, you can see. What's in here? No, there. That's the one. Yeah, it's just a really stupid thing that I did while I was in bed. Okay, that's pretty much it. That was a really good day. I'm pretty happy about starting the week this way, and we'll see if the rest of the week we get something as clear as this. We do have some days I have some aggressive news that we might have to miss out on. Today we actually had aggressive news at 9, but it wasn't as aggressive as expected. Probably because of price not really doing much. Let's actually check it out. Sorry, the news not being that aggressive. And it was this one. Oh, it was a speech, sorry. Okay. I'm not sure how speeches work because maybe, you know, it could say something through the speech that could alter price or something like that. It's not what I meant to do. How do I? Okay, I want to put full screen again, but apparently I won't be able to. Okay, cool. So that's really pretty much it. Hope you enjoyed this video. Hope you had a nice session, and I'll be talking to you through the week.